Hey traders, Raghee here. Let's get a quick audio and video check from the free training room. I think we're good to go in there. All right, excellent. I'm on a different browser this morning, so thought I would check. All right, great to see everyone on the YouTube, the Facebook. What am I leaving off? The Twitter. Good to see everyone. Welcome to Charts and Coffee. All right, so we've got a lot going on this week. We have obviously end of quarter. We have end of we have the the PCE and the University of Michigan inflation numbers this week. Taking a look at my planner here. All right, yep. So we have plenty going on this week in terms of data that could affect what we anticipate from the Federal Reserve going forward. And with, let's see here, video seems a little glitchy. No, I think we're all right. Okay, so we have two pieces of inflation data coming out, as well as having the end of quarter. End of quarter for me, I think I mentioned it before. It merits mentioning again. It's a terribly difficult week for me personally because, look, I think it's a tough week for a lot of folks, and unless we're plugging in our data into something like TradesViz, which you'll see me use a whole lot more as we go into summer. I mean, step back and look at months, if not years, of trading data. There's no way to pinpoint which times of day, which days of week, which points within the calendar each month that we are either very, very good or not so good, right? And that way we can avoid times of day, times of the month, times of the year where our production does not merit our putting risk on the table. I'm going to harp on that all darn week. It's a really, really important point. Not everyone is equally great, right, throughout the year. It's just not work, nor traders for that matter. So I'm going to be extra cautious, but opportunistic in that longer term time frames, maybe weekly, daily, we might be able to see some shock absorption from an event that tends to move outside historical norms, historical volatility probabilities. All right, so with that being said, let's jump into what we've got going on this morning after a pullback in the indices. By the way, this is a pullback in an uptrend, right? And it's easy to get caught. And as soon as we start moving lower, you know what's going to happen? Turn your television on, start surfing the interwebs, and you will see all the updates that are saying, oh, this is the beginning of the end, right? That's just the way analysis works in this game we play called trading. When markets are moving higher, one type of analysis is popular. When markets are moving lower, another type of analysis is popular, but usually it's chasing the momentum, it's chasing price action, right? So the bottom line is, can I step away from that fray, from that mental mosh pit, and say, what's the overall trend? Well, on the S&P, it's up. On the NASDAQ, it's up as well, which is a really big reminder. The NASDAQ will, unless we start to see tremendous amounts of rotation out of the technology, communications, and consumer discretionary sectors, unless we start to see rotation out of those, this is still the most resilient of the indices because all three cylinders are firing away, right? All three of them. And so ultimately what we want to remember is that it's the pieces of the sectors that matter. The S&P does have a shot, and it's an interesting one. And this is something that I elaborated on in this week's This Week in the Market issue. So if you haven't checked that out, you can check it out at thisweekinthemarkets.com. And that conversation really is about the lagging corners of the S&P, namely financials and healthcare, namely financials and healthcare. Are we going to run into trouble with tech, profit taking, rotation? And are we going to see things like healthcare and financials start to get a little bit more flow, or even a little bit further down, sort of, if you will, the totem pole of weakness and strength? Do we get down to sectors like XLE, XLRE, XLP, XLU, some of these higher dividend yielding names, which are usually where you hear dividend, you hear defensive. I mean, that's really usually how that game is played. So those are rotations we're going to keep an eye on. It's going to be especially important to keep an eye on rotations in healthcare and financials for opportunistic entries, and then be vigilant about not expecting necessarily up and away action on tech. Although from a trading standpoint, I am all for that. I am all for continuing to, at least in the near term, short term swing trades. I am all for buying the dip in the outperformers. All right. As always, gang, phone lines are open for your questions. And first one up. Good morning. Good morning. Good morning. Great to see everybody. All right. First one up. Raphael asks, any level to be long Microsoft? Sure. So Microsoft, of course, is a NASDAQ conversation. Microsoft, of course, is an XLK conversation. It's also very much attached to Apple, etc. All right. So do I like Microsoft for a buy? First of all, let's get directionally clear and on which time frame. Intraday, 5-minute time frame as a day trade, I would put Microsoft on the watch list. You move out to the daily, I would also keep Microsoft on the watch list, both for the long side. I keep the 60-minute for now on the back burner. And then in terms of where I want to be a potential buyer, when the bell rings, what I will have is a fresh set of price movement ranges. So the bell has to ring. And then once that happens, Raphael, I'll start looking at my daily price movement ranges, which is the longer term daily time frame oriented view of historical volatility, as opposed to the hourly view of historical volatility. And they're two different volatility measurements. The curation's completely different. The zones are completely different. So I'm going to be waiting on something like that. And ultimately, I think we're going to open around 330, 80-ish this morning. So it's going to be right in this area here. Yeah, I'm going to wait for that daily price movement range, but I want to be a buyer, Raphael, and probably not that far, maybe a smidge lower than where we are now, but I do want to be a buyer. Just keep in mind that with end of quarter coming up, and of course, the two data releases for inflation, we're going to be dealing with increased volatility. So I would keep the time frame in two ways, either really short, 1 to 3 days, or really long, and maybe think about what the weekly could present. So you have the shock absorbers appropriate to what we're going to be dealing with as we wind down June. Okay. But definitely something I'd want to be long in, but that would extend to XLK and Microsoft and Apple and the NASDAQ as well. All right. Next up, when I use the pattern minor high or minor low, does the second candle have to eliminate just the body or the tail as well as the... Sergio, feel free to ask the room. I'm not going to go into a lot of detail on that. It's a little too inside baseball. But basically, the question is this the body or the tail? I don't know why. So here's a really great question, Sergio. I've been getting a lot of this lately. When people say, oh, you include wicks. Gang, I don't know when or how somehow someone has said ignore wicks. Right? Candle bodies are great. The candle bodies are the open and the close. And of course, the close is probably the most important of open, high, low, close. But all of those levels, right? All of those levels, open, high, low, close, are represented on a candlestick. And the wicks, of course, represent the high and the low. So I think this question really is about wicks, right? Gang, the market went there. It may not have stayed there, but it went there. And somehow or other, and I don't know where this started, but please, 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 don't think that we just take wicks off the candles, right? Of course, wicks matter because at some point in the day, price went up there or down there. Yes, it's the total look at the day. And it doesn't mean that open and close. I mean, really, frankly, I could care less where a market opens, right? So if we're going to do anything, there's only two kinds of candles. There's only two kinds of charts out there that make any sense at all for me, right? Either a Western bar chart or a candlestick, which are the same thing. A Western bar chart, with a little tick to the left and the right, you shade that in, it's a candlestick, right? So this idea that a Western bar chart is that much different, it's just not true, right? So just to to let everyone know. Let's say I take a look at a bar chart. There's no difference there. Just shade in the space between the two ticks, and the little tick to the right, the little whatever you want to call those, to left and right. It's a candlestick, right? And then let's go back to the candlestick. And so there it is, right? Now, the only other kind of candle, if we're going to start to forget about highs and lows, you get rid of open too, just throw a close, right? If you're going to start using a line on close chart, just that single line, that's the only thing that I would recommend. Because, and it's interesting, Sergi, I'm glad you asked me this in Charts and Coffee. All of a sudden people are saying, oh, we include the wick. And I'm thinking, where on earth did something otherwise pop up? So no, always we're going to include the wick. Always. Thank you for the question. All right. Next up, Mike from our training room is asking about Zillow. All right. So what do we have in Zillow? Let's start with the structure. And we're above the 200. Yes. And we also want to keep in mind that, also we need to start thinking about earnings again, gang. So this is where we have to shove the chart over and ask ourselves, where is the timeline to earnings? As long as we're not within 2 weeks, it's fine. Okay. As long as that goes. And I would be a buyer at the lower end of the range. Right now, Mike, I'd have to focus on the short side potentially, because I've got a neutral market, overbought stochastic. I'm in a range where the Darvis has kicked in. Look at these two Darvis levels. I've got one high sitting at about 49.32. I've got the other high sitting at about 49.07. And so that could be that inflection point. That could be the overbought Darvis resistance. Then I've got the slow stochastic also overbought. So I would look for possibly the short side. Or if you want to be long, say, Rog, I don't want to short Zillow. Totally cool. I really wouldn't want to either, because it's above the 200 propulsion. It's above that 200 exponential moving average. So perhaps a retracement, right? So here's another thing we can do. We'll cut this thing in half. We'll look at the Pingala, right? Which is sitting at about 47 and change, 47.08, right? So this is just the 50% of the last major move. Yes. I'm done giving Fibonacci, Leonardo da Pisa credit for these. We're going right to the source. So that's our Pingala right there. And that's where, if we're going to pull back, that's what I'd keep an eye on, right? If you want a little bit of a pullback before getting long. If not, we're arguably at kind of a overbought level on Zillow. So thanks for the question, Mike. All right. So let's see. We covered Sergio's question. And yeah, gang, for all that is good and holy, please, whoever is saying out there, wherever you are, saying highs and lows don't matter, plug your ears. That's about the dumbest thing I've ever heard. Yeah, please, please, please. I've got a rash of questions on that lately, and I wish I could figure out who's saying it, because I can staple their mouth shut. All right. Moving on. All right. I'm so glad. Great questions. Thank you, Mike. Thank you, Sergio. All right. Russell ran right into the 618 Fibonacci from the last rally yesterday. All right. Let's pull that up. Okay. So Russell, Josh, I'll tell you what, I'm glad you brought up the Russell. Russell is still in a precarious position because of the KRE. And when a lot of fund managers, and I think all of us too, what is the next crisis on the horizon? Because we're already told what it is, and it's not recession, is it? The next crisis potentially on the horizon is looking at possibly the commercial real estate. Commercial real estate lands right back in the KRE, because that's where a lot of those loans are, that they're the ones that are most risk for the default of those loans. And that's where the refinancing is. That's the layer of refinancing, right, at the regional bank layer. For that reason, I've been very hesitant with the Russell. That said, if you're looking at the retracement here, today has essentially been tested. Yeah. I'm not sure what the question is, Josh, or you're just making a statement, which is cool too. But in terms of the NAS, I'm most bullish than NAS, right? I'm most bullish than NASDAQ. After that, it's the S&P as long as tech is strong. Remember, gang, if tech starts to roll over, the S&P is going to potentially take it on the chin worse, unless as that one cylinder of tech begins to underperform or miss, right? I need financials and healthcare to step up. So be really, really careful in terms of, again, this week, right? This week, be really, really careful. All right. And Mike says, thanks. Oh, my pleasure, Mike. My pleasure. I like the long side of Zillow generally. I just need a little bit of weakness. Yeah. All right. I'm wondering about IONQ on the 1 hour time frame. Thank you for the heads up on the time frame. I appreciate that, Rainy Days. Always good to know what you're seeing when y'all ask a question. Very helpful. It's an overall uptrend on IONQ. It's an overall uptrend. So I would look for, I would look for a volume ledge. Yeah, so this is the way I would do this. This is the way I would look at that one. Here, let me show you. The way that I like to look at levels on a sub $20 stock. All right, the way I want to look at levels there is, where is volume, right? And there's two ways right now we can look at volume for the quarter. This is a brand new stock, apparently. Okay, I don't have any skin in this game, but if it's a stock that isn't a brand new stock, I don't know if it's an IPO or DPO, Richard. That will matter. I would, if you've got this young a stock and it's an IPO, find out how long the brokerages are gagged for when they can't say anything, and find out when they finally can exercise their options. So find out those dates. If it's an IPO, if it's a DPO, it doesn't matter. But ultimately, we want to start to see volume levels taken out. So if I were to anchor my volume to the born-on date of this stock, take a look. I've got a point of control in that 1 hour at about $10.50. Yeah, about $10.50. All right, next up is, I have so many videos. Yeah, Richard, I've been around for a while. Yeah, it's going to happen. They're everywhere. How could I find one on chart setups? Well, the easiest place to go, and I think Lorna Bot shared that with you as well, is go to countdowntrader.com. So COUNTDOWN trader.com. That's probably the best place and the most guided place. In other words, Trish puts this together a couple of times a week, and these are going to be current analysis. It's going to be my indicators. I would definitely check out countdowntrader.com, because that's going to be a nice chronological look at what I'm looking at in the markets, and then also reviewing trades, and then also the indicators that I use. As far as a single video on the other side, quite frankly, of the paywall, look, I'll be straight up with you all, gang. Most of that's behind the paywall, right? I mean, if you piece together all the different bits of information that I've shared for, at this point, for over 25 years, yeah, there's a lot of great information out there. But a lot of the reason people are on the other side of the paywall is because that's where we kind of streamline everything, and we actually share the layouts and so forth behind in the membership rooms. So I'm going to be straight up with you, Richard. Check out Countdown, and then with the amount of information I've got by way of videos, you'll be able to put it together. I would say start with Grab, Wave, Propulsion, and Darvis. Those are all free, by the way, Richard. Grab, Wave, Propulsion, and Darvis. I would start there, and you could set that up really easily on TradingView. Okay. All right. Very cool. Very cool. And then countdowntrader.com. COUNT downtrader.com. All right. And just like that, gang, time's up. As always, thank you so much for being a part of Charts and Coffee, Caffeinate and Dominate crew. I'll see you tomorrow. Same time, same station. All right. Be good to each other.